Welcome to our channel Aayakar Kamkar. This is the third part of our video, More the Taxes, More the Returns. In this video, we are going to discuss about Public Provident Fund. The investment amount is minimum investment 500, maximum investment 1,50,000, minimum installment once a year, maximum installments 12 times a year. Best time to contribute 1st to 5th of every month. Interest rate. The Public Provident Fund rate is at 7.1%. Now this table shows how the return on investment differs based on the tax bracket. If the tax bracket is 0%, that is if you are not paying any taxes, then the return on investment is 7.1%. Let's assume if you are a taxpayer who's paying 10% taxes, and if you're making an investment of 1 lakh and the investment is 7.9% return, then the tax paid is 790 and the return after the tax paid is 7110, which means if you come within the purview of 10% taxes, it is equal to 7.9% return on investment. Similarly, if you are under 20% tax bracket and you are making an investment of 1 lakh with the return on investment being 8.9%, after the tax is paid at 20%, that is 1,780, your return after tax paid comes to 7,120, which is equivalent to 7.1%. Which means if you are a taxpayer who is paying taxes at 20% tax bracket, the return on investment in Public Provident Fund is equal to 8.9%. And let's assume if you are a taxpayer with 30% taxes and if you are investing 1 lakh in a return on investment of 10.15%, then your return on investment is 10,150. The taxes paid, which is 30%, is 3,045, and the return after tax paid is 7,105, which means if you come within the purview of 30% tax bracket, the investment you make in Public Provident Fund is equal to 10.15% return. Investment in Public Provident Fund matches the return on investment for taxpayers at 10% tax bracket 7.9%, 20% tax bracket 8.9%, 30% tax bracket 10.15%. Features. Interest is calculated based on the balance as of 5th day of the month. Interest is credited on 31st March of the financial year. EEE tax benefits. The first E represents Section 80C exemption up to Rs 1,50,000 available under old tax regime. The second E is interest is tax free. And the third E represents the maturity amount, principal plus interest, which you receive at the end of the tenure, which is totally exempt from tax. Tenure. The period is for 15 years. At the end of 15 years, it can be extended in blocks of 5 years each. Extension can be done once in every 5 years. Loan on PPF. Loan can be taken after 3 years of opening. Interest rate is 1% if repayment is made within 3 years. Interest rate is 6% if repayment is made beyond 3 years. No interest will be paid on PPF until repayment of loan. If you make an investment of 1,50,000 for a period of 15 years at 7.1% interest, the maturity amount is 40,68,209. And if you are extending it for another 5 years, making it 20 years, it is 66,58,288. And if it is 25 years, it is 1,03,08,015. And if it is 30 years, it is 1,54,50,911. Public Provident Fund investment is a risk-free investment, and the more the taxes you pay, the return on investment is more. Subscribe to our channel Aayakar Kamkar for further updates and mail us for any tax consultation at aayakarkamkar@gmail.com. Thank you.